Hi everyone, so I'm looking at another serial acquirer, and this one is also out of Sweden, like so many others. I don't know what's in the water in Sweden. They just seem to love the serial acquirer model. Good on them. I think it's a very successful model, and there's a playbook already there from a lot of other businesses. So yeah, for some reason it works really well in Sweden. I think it would work anywhere in the world, but anyway, Sweden seems to be the heart of the serial acquirer world. So we're looking at Momentum Group today. And before I jump into sort of a high level look at Momentum Group, you're going to need a broker that you can access the serial acquirers that I talk about here on the channel, especially the Swedish market. So Interactive Brokers is the broker that I use. There's a link in the description below. I've got demo videos here on the channel. They're, I think, the best broker out there. I use two brokers, and this is the main one that I use, the other one being Saxo Bank, but Interactive Brokers, this is a plug for them because I do think they are the best. Link below, and that's where you can access Momentum Group. So Momentum Group have a group of companies, or subsidiaries is what they generally call them, is industrial components and industrial servicing. So think of like industrial specialized equipment in like valves and hydraulic machines and presses and stuff like that. That's sort of the realm we're talking about at the moment. And it actually reminds me a lot of Technion. So I'm very familiar with the subsidiaries there, and I think there's a lot of similarities here. They probably might even be competing on some of the deals. Actually, probably not, since they source them in very different ways, but yeah, that's sort of the space that Momentum Group are into. So Momentum Group gets its history and its lineage from a company called Bergman Beving. And Bergman Beving they were founded in 1906 and have built all these different serial acquirers and spun them off in different ways. So with other companies, as you can see here, AdTech and AdLife, Aligo, Momentum Group is another one, and that is something sort of more recently they've spun off, as you can see. So this is from the Bergman Beving tree, which is a very successful group of businesses that they've been able to spin off into their own little entities over time. And yeah, they're following I would say they're the original serial acquirer, Bergman Beving, out of Sweden. They're I guess the first to do this. So after reading through some annual reports, I actually think this little quote here from the CEO sums up the business quite nicely. He said, "We are not so complicated. We acquire, we develop, and we build culture. If our employees develop, our companies will also develop." That's what they're trying to do here. They're trying to buy and acquire subsidiaries that already exist, that are already running well, with good people involved in those operations, and that's it. Let them do their thing, help them as needed, but essentially be just a nice home for them to cash out of their business if that's what they're trying to do. And yeah, this is all Momentum Group are doing. It's very similar to a lot of the other serial acquirers. They have a very decentralized model. They want to find good quality companies, and they're trying to find companies that have some sort of specialty, maybe so they have like a competitive advantage in each one of their subsidiaries that they can keep for the long term. That's the play. So the KPIs that Momentum Group look at are, they're looking for earnings growth above 15% per annum, and the most recent 12 months that you can see here, it says 19%. The profitability, they want that to be above 45%. It says here, Momentum Group aim to achieve an EBITDA to working capital return of at least 45%. So measured as EBITDA in relation to utilized working capital. This applies both in the group as in the whole and to every individual operating unit. So I think this is quite a unique metric, this EBITDA to working capital relationship. I think that's quite interesting. A lot of other companies don't do this as one of their profitability targets. I think if I think about this logically, EBITDA to working capital is a pretty solid metric. That's a good way to figure out whether the money that you're spending is turning into profit. So they're trying to target above 45%. The last 12 months has been 61%, so it's well above their target. And their dividend policy is they're trying to be above 30% of earnings per share as dividends. They want to pay out at least 30% of their EPS, and they paid out 37% last year. It says here the board of directors dividend proposed to the AGM is 1 SEK per share, which is that payout ratio. So whether I don't really love dividend policies that are kind of strict. I really want to see some flexibility, because what happens if a lot of deals come on available in the next 12 months, which is very likely considering, things might get really tough in the marketplace and there might be a lot of good deals around. You don't want to be hamstrung by this, essentially a third of your profit going back out to shareholders that you don't have anywhere near as much to play with. So since I'm comparing this to Technion a little bit, Technion just got rid of their dividend policy, saying we are just going to decide what we need to do with the money as best fit. Sometimes they might pay a dividend if they've got nothing to go out and buy or to reinvest in or pay down their debt or anything like that. Then they might give the dividend out. But to have a set policy in place where you sort of have to pay it out, I don't love that. I think it's not the best use of capital, because I've got to pay probably tax on that dividend, and they've already paid tax on the earnings per share. So don't think it's very tax efficient. Plus, I've got to then go out and use that money to put somewhere else. It's not compounding away as nicely as it would. But on the other argument to this is that because I'm getting a dividend, it means that it reduces the risk of fraud in the business, because they're actually having to produce cash flow to pay out cash, if that makes sense. There's a part of that money that has to go out. So as an investor, if I'm getting a little dividend, at least I know that, well, this company is actually making money. There's a real operation going on here. This isn't just numbers on a screen. This is tangible, and that gives investors quite a bit of assurance that things are actually what they say is what's actually happening. So I can understand that there's two sides to a dividend, and I don't know. I don't know where I sit exactly on that. I think I understand that a little dividend could be good for some people, but me personally, I'd like to feel like I could trust the investments that I'm in and really get to know them anyway, so that I would feel confident that they are doing the right thing with the money. But there's some trust element there, and I guess if you get burnt once or twice in the past, you probably don't trust as well, therefore you probably want a dividend policy. I get that. Okay, let me go on. All right, so let me run Momentum Group over a quick checklist that I put together just to give me a feel whether I think this is a company that I really like or not, and I need to do a bit more digging, but let me go over some high-level stuff. So do they have revenue growth? Yes, revenue growth has been very strong. You can go look up the financials to see that. Margins are at 10% and they've been stable even through all the pricing pressures of late, which is really interesting to see. Instalco, for example, had a bit of margin pressure, but margins for Momentum Group have been stable. So I think it shows good discipline that they've been passing on the prices quickly, and I think that's a testament to the leadership of the company that they've been able to enforce the pricing increases to customers efficiently. So good on them. That's pretty impressive. Return on invested capital is at 28%, very strong. Again, not another reason why I don't really like the dividend. If they can invest money at 25-30% per annum, why the hell are they giving me a dividend? Let that compound away. Use that money for more acquisitions, please. Next up is debt, and I think this is very impressively low. It's less than 1 times their earnings. That's about the best I've seen in the serial acquirer space. I think that's great. I think a little bit of debt is actually quite good. I think you can develop quite good relationships with banking institutions and things like that by keeping some debt, and being a good user of debt means that you've got firepower if you need it. If something amazing comes along, you might be able to access that debt. So I think having a little bit of debt is good. I don't like it going anywhere above 2. It starts to make me nervous. 2 times their earnings, but these guys are less than 1 times their earnings. So a really good position there, I think, from a debt point of view. They could probably even get a little more and be still pretty comfortable, but I like that they're conservative. That makes me a lot more comfortable. Free cash flow, that's been growing. They're doing a good job of converting their profit into cash. That looks like it's going to continue growing with the business, so that's good. Shares outstanding. Now, they have been buying back shares, which I actually think is maybe wrong, because even though most people would think that's a good thing, but I think the stock price, which we'll get to a little bit later, might actually be a bit overpriced. So I don't know whether I agree with stock buybacks, because I think it's not that good use of capital. I think, again, that 28% return on invested capital, where they're getting in making acquisitions, they should be probably focusing on that more than buying back shares. So I'm not sure where I actually agree with this one. Now, regarding incentives, the CEO's salary is about $700,000 equivalent, but he has 26 million in shares. So the incentives are very well aligned. Salary is nowhere near as important as the share price. He is an owner, just like if I was to invest, just like me. So another good tick of approval there. Let's jump into a valuation now. Okay, so the valuation on the screen is, I've got growth rates of about 15% over the next decade. Now, that is because even though the return on invested capital is like 25, 28%, remember a third is getting paid out in a dividend, a third is probably going to taxes, and then they've got a third left over for that reinvestment rate. So just because they're reinvesting at 28%, they're not growing at 28%. I think they're growing at about 15%, something around that. And I think that's actually very good anyway. It's a strong number. So I've got a discount rate of 22%, which is essentially me aiming for 15%, but I'm building in a margin of safety there, so I put it at 22%. The multiple I could sell it for, I think you could get 20 for this being such a really well-run, stable, diversified business. I think at 20 times their free cash flow is fine. I think that's at those growth rates as well. You probably could get paid more than that, but let's call it 20. The free cash flow number I've put in, the shares outstanding number I've put in, and cash and debt was negligible anyway. So I wanted to buy this at around about, looks like 42, it should be in SEK. So anything, probably considering I could see the multiple being a little higher. Yeah, anything under 50 and I'm starting to get interested, 50 SEK per share. 40 is starting to get interesting, but then I'm looking at like, getting into the 30s is going to be a pretty good discount rate. I'm probably getting up into the 24, 25, 26% range, which is something that, because I don't have a whole lot of cash, most of my money's tied up in investments already. I would want a pretty good return, a likelihood of good returns. So I probably want even under 40 SEK per share. That's sort of how I'm looking at it. That's where I think a good price is. I think fair value would be, what you can do is just essentially, if I'm using a discount rate of 22%, you just double that number, and that's around about what fair value would be. So 80 SEK per share is probably about fair value of this business. So depending on what time you're looking at this, I think about, if this is in 2023, which is when I'm looking at this, I think 80 SEK per share is probably fair value. Anything above that is, I think you're starting to get in the overpriced territory. All right, let me summarize everything so far. So I like the business, and overall I see a lot of discipline, which is good. I like they're conservative on their balance sheet. I like that they've got stable margins. I think that shows strength. And they appear to be a really good long-term acquirer with a healthy track record, and they've come out of that Bergman and Beving tree, which I think is a really good foundation for them to come out of. I don't like their rigid dividend policy. I can accept it. Don't really like it. Don't particularly like how they are buying some deals with shares. So when they're making acquisitions, sometimes they issue they give shares out. But I guess that's alignment of interest for the new business. So it's not crazy, but I don't love it. I think if you're paying with just cash and debt is the better way to go. Honestly, I think Technion is just a really similar company, except Technion have scrapped their dividend policy. They pay deals with cash and debt, and they have to issue shares. So I think I prefer Technion a little better personally, but this is still a very good company, and I'm not going to disregard it just because Technion's a little bit better. The price could always get to a point where Momentum Group is a far better investment, because I think they're very similar and they've still got very good management. So yeah, the only reason I'd probably buy Momentum Group would be if it got really cheap. And like I said, around that 40 SEK per share, that's getting me interested. If it gets lower than that, then I'm really digging into this. So that's going to go on my watch list. I'm going to keep an eye on it just in case something dramatic happens in the space, and I don't know, maybe Momentum Group all of a sudden loses some momentum. Sorry for the bad joke. But if it does, I want to be aware of it so I know where I should dig more and get really interested. So there you go. I hope that's helped you if you're digging into this company as well. I hope this has given you somewhere to start. Please add comments below if I've missed things or there's insights that you know about that I haven't covered. I've obviously haven't covered everything. There's a lot more to this business than I've just brushed over today. But yeah, I hope you've enjoyed. Remember that Interactive Brokers link is in the description if you want to check that out, if you do want to invest in something like Momentum Group out of Sweden. Okay, and that's enough for today. I'll see you in the next video.